Gold just passed $2,000 an ounce, setting the stage for a historic new bull run. Multiple billionaire investors are loading up on gold, including hedge fund founder Ray Dalio and real estate mogul Sam Zell, meaning now is the time to own gold. One precious metals expert is stepping forward with a big prediction. He believes we could see gold reach as high as $3,000 by the end of the year, possibly higher. So find out why and get instant access to his #1 gold investment for 2022. It's not bullion, an ETF, or a mining stock. In the past, folks using the same gold strategy could have been able to make nearly 50 times their initial investment. Considering how quickly the price of gold has been moving, you don't want to waste any time missing out on the gains he believes are in store for this investment. So to get a copy of his new free report with all the details, simply go to 2022goldmania.com. Again, that's 2022goldmania.com for a free copy of his new report. Hi, this is Daniela Cambone, and welcome back to Stansberry Research. Please welcome to my show today Byron King. He's the author of Whiskey and Gunpowder over at St. Paul Research. His main focus is the miners, gold, precious metals. We're going to be covering a lot of ground today. Byron, good to be back with you. It's been a really long time.
It has been way too long, but it's terrific to see you, and congratulations on everything you're doing with your current, webcasts and such. They're great and tremendously informative. Thank you for what you do.
Oh, well, I appreciate that, and thank you for being my guest today. I know we have a lot of ground to cover. Offline we were talking about the Russian sanctions, and that's where I want to start with you today of, who will pay the biggest price. Are you surprised to see the US dollar keep ticking higher here and that it hasn't backfired on the US dollar yet?
Well, I think the important word in that question is yet. I think that sanctions, in so many ways, are a disaster, not so much for Russia, but for the U.S. and for the West in general. The dollar is strengthening, yes, because, why? I mean, well, what's the alternative? I mean, the euro is weakening. And why is the euro weakening? Well, because Europe has just, with sanctions and such, Europe has just placed its entire energy economy at risk, with the natural gas sanctions, the oil sanctions. They say, well, we'll make it up. We'll get it somewhere else. Maybe you will, and maybe you won't, but it's not going to happen fast, and it's not going to come easy. So the dollar is strengthening because the euro is weakening. The euro energy economy is precarious, and then you add all the war risk on top of that, just in terms of the whole issue with Ukraine and Russia and how that thing could expand, over however long it takes.
But you think over the long run it will come back to haunt the U.S.?
Absolutely. The U.S. through sanctions has weaponized the dollar. It's kind of like weaponizing air or weaponizing, GPS, for example. Everybody wants to know where they are, but GPS it's a military system, and it's designed so that in times of war we're going to shut it down. Well, if we tell the whole world that the dollar is a weapon, and whatever happens, if we don't like you, and right now, you can say, well, we're really mad about Russia and Ukraine. This is terrible. And yes, it's terrible. I'm an old Navy guy. I hate war, but the idea that we have turned the dollar into a weapon and just gone out there and started to seize hundreds of billions of dollars worth of sovereign wealth from Russia, and then also, with the oligarchs and everything else, that we're just seizing this stuff because, well, we're mad at you and we don't like you. I mean, what does that tell people in the rest of the world, the other 7 billion people in the world who hold dollars? It's like, oh, gee,
Yeah,
if the Americans ever get mad at me, they're going to take my money.
exactly. And to that point, Byron, do you think it's interesting how, all has been done to avoid boots on the ground because, we don't want to get involved. But, what is this alternative, right? We are involved.
Yeah. We are involved. When we say we don't want boots on the ground, we don't want the political cost of, our guys and our girls coming home in boxes and body bags,
Absolutely.
but the cynical way of looking at it is we're willing to fight to the last drop of Ukrainian blood. We're going to feed those missiles in there, feed that artillery in there. We're having these debates over no-fly zones and should we send them jets and all this sort of thing. And the Russians, who they're not stupid people. They're very smart people. They're looking at this saying, you put one more item in there and we're going to blow it up. I mean, when they shoot these cruise missiles and they land like 15 miles from the Polish border, and they hit a target, What does that tell you? They have operational reach. They can reach hundreds of miles behind the front lines and hit a target with an accuracy of about a meter or two, And when they say we're hitting a target, 15 miles from the border of Poland, that means they could hit a target 15 miles inside the border of Poland too, if they wanted to. And it is so dangerous. It is so precarious what's going on. A lot of politicians are having a great time, thumping their chests over, all sorts of, great emotional causes because war brings out the worst of emotion in people. But the practicalities of it are that this war in Ukraine, the special military operation in Ukraine, is putting the whole world system at risk. I mean, you already know, you know this. I mean, we've put the agricultural system at risk with the wheat, the fertilizer. We put the energy system at risk, by sanctioning gas, sanctioning oil. We put the whole mineral section at risk. All the exports that Russia is critical in the world, for say nickel, palladium, copper, the thing, rare earths, the things that Russia is part of the system for.
Yeah.
I mean, we've weaponized the dollar, we've weaponized world trade, and things are going to fall apart slowly or quickly. But they're not going to get better from here without a whole lot of work and a whole lot of really deep and
Mm.
brilliant diplomacy going ahead.
Hmm.
So the investment lesson there is dot dot dot. We'll get into that in a minute, I suppose. Yeah.
Yeah, we will get into that. But first, let me ask you a question that I've asked the other experts that come on, and I really enjoy hearing the different opinions here. It really helps educate myself in that
Mhm.
the U.S. must have known that if we go down the path of sanctions, that this will come back, right? That this will fire back on us, that this could potentially dethrone the U.S. dollar. Don't you think they thought this through, or they didn't, or what was the mindset here?
Well, the mindset is that for years, the U.S. has put, and the U.S. and its allies have put uh, sanctions on people we don't like, and sometimes they work, and most of the time they don't. But it never really gets to some sort of major tipping point where it all blows back in our face. We've had sanctions on Cuba since 19 whatever 59. Do the math. 63 years. Has Cuba changed for the better? Well, I'm not about to say it has. We've had sanctions on Iran for 40 some years. Has that changed Iran's behavior? Not really. How about North Korea? We've been sanctioning them since 1950 or something. Have we changed North Korea? No, we haven't. Um, and as long as you're sanctioning, little countries, beating up on little countries, little Iraq or little Libya or little Syria or something like that, yeah, you get away with it. All of a sudden, you sanction Russia. I mean, that's a big country. It's what, 11 time zones. It's huge. You say, well, it's only 140 million people, and they have a GDP the size of, fill in the blank, Portugal, Texas, Netherlands, whatever. Yeah, 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 I hear you, but they also have 6,000 nuclear weapons, and they have, submarines that launch missiles, and their missiles can fly halfway around the world and hit targets, within 30 feet of where they're aimed. So yeah, we haven't done that before. So is it when you say have we thought it through? I think a lot of people thought it through, but I don't think they knew what to think. When
Right,
you look
right.
at the Russia, though, has Russia been thinking about this? Well, let's see. I've been writing in Whiskey and Gunpowder and before I've been writing for years about how Russia's been growing its gold reserves. Russia has been planning to deal with economic sanctions just through gold alone for 8 or 9 years at least. And then think of how they've set up an alternative to the SWIFT system for international transactions. When MasterCard and Visa said, "Oh no, no more MasterCard and Visa for you, Russia," they said, "Fine, we have our own credit card system, and we'll still be able to, go to the bank and buy our groceries or whatever." I mean, I don't, I don't, I don't think that the American side and really understood what it was getting into, which is why I don't think a lot of our diplomats and our policymakers and our politicians truly understand where this whole thing is heading. Uh, I think the investment community who listens to certain people like yourself, obviously, I think a lot of people in the investment community are far ahead of the people making policy at the U.S. Treasury Department.
So two good points there, and the other main difference. You brought up, historical sanctions in the past, and you're right. It's not the same playing field today because now you
Mhm.
have Saudi Arabia, countries like Saudi Arabia, look at saying, "Hey, maybe it's time we look truly outside the U.S. dollar system here."
Mhm. Absolutely. I mean, I'm old enough, you're not old enough, but I'm old enough to remember when Richard Nixon closed the gold window. And then, about a year and a half later, because of inflation, the price of oil was in miserable shape. The Arab-Israeli War in 1973 uh, turned into that Arab oil embargo, and out of that evolved the petrodollar, where Saudi said, we'll sell oil and we'll price it in dollars. And it's been that way for 50 some years. And, what has changed in the last, pick a number, 6 months or a
Yeah.
year, a lot of things, but Saudi's talking about, well, maybe we won't sell all of our oil in petrodollars anymore. We'll sell them in yuan.
Right.
Um, and much of the world is already becoming accustomed to the idea of they're going to buy oil in rubles. And they say, well, they're going to have to sell it at a discount. Yes, so what? The Russians are still making money if they sell oil at the equivalent of 75 or 80 bucks a barrel as opposed to 105 or $110 a barrel. They're still making their money. And so I think that we've really put the dollar as the reserve currency. We, the West, not you and me, obviously, we're not making policy, but the West has put its dollar at risk and put our whole economy at risk, a whole standard of living, the whole ability to just sort of go where we want to go, buy what we want to buy, and live the standard of living that we live. There's a lot of implications on that too.
I want to bring up the other point you made about Russia gold and how they've been,
Right.
accumulating over the years here, perhaps in preparation
Hmm.
for this moment in time. How do you
Hmm.
think they will use their gold now? Will they start liquidating some? Do they have access to it? Break it down for us. How do you see this playing out?
Okay. Well, I don't really see them liquidating their gold because they don't need to. The Russians don't need to sell their gold. Uh, I think the Russians are Russia is a very autarchical economy. It's very, very self-contained. They grow their own food. They're a net food exporter. Maybe they import coffee and bananas or something, but they produce immense amounts of electricity, immense amounts of steel. They have their own aerospace industry. It's not Boeing, but they build good things, and so they trade with the world because okay, yeah, you trade with the world, you do what you play to your strengths. um, but the 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 Russians are using their gold right now uh, to sort of support their ruble. Note there were two things that the Russians did right after the sanctions came on. First, they raised their interest rates to 20%. So it's like, whoa, that's central bank work there. That's Paul Volcker quality central
Yeah,
banking. We're
yeah.
gonna make our ruble attractive as a monetary instrument. The next thing they did, they said we will pay 5,000 rubles for a gram of gold. And what did that do? Well, that also helped to buttress the ruble. I think President Biden at one point said the ruble has been turned to rubble. Well, not exactly, because that rubble has risen from the ashes. The ruble is as strong today as it was, 2 months ago before the hostilities began. And by putting a floor underneath underneath the ruble in terms of gold, by putting that 5,000 ruble number on there, and they've said since then that well we'll adjust it, we'll negotiate over that number, but by putting something of a floor, even a bumpy floor, underneath the ruble, a solid gold floor, they have killed the downside trade for gold in the West. Because if you're a
Yeah.
Western trader and you're trading paper gold, and you never in your life hold a piece of gold in your hand, ever, you never hold the gold, you only trade paper, you can't trade it down below a certain number because you'll risk the arbitrage of wait a minute, the Russians are going to come in there and buy it for rubles for real gold. So right, that's two monetary weapons that the Russians have deployed, and I think quite successfully. I mean, you can say,
Such
well,
a
they
good point.
lost their cruiser, their ship sank.
Yeah,
Yeah, but their gold is still working. So, and I think in
such a
the
good
long
point.
run that might be more important.
Byron, like I said, very valid points. If you had to sum it up, the one thing that the U.S. really underestimated or got wrong here, what would it be?
I think that the Western U.S. Treasury people who put the sanctions in did not understand the medium and long term risk to the dollar of truly weaponizing it, going out there and just literally taking hundreds of billions of dollars of sovereign wealth from another country. And even if you're mad at the country, you can be mad at Russia for invading Ukraine. Yeah, I get that. I get that. But we're not, we the West, the United States, NATO, whatever, we are not at war with these people. Not in any technical sense. Maybe in a practical sense. I mean, our missiles are killing their troops and et cetera. But we're not at war with these people. And the idea that you just go out there and say we're going to put sanctions on you and we're going to take all your money, you've just destroyed the credibility of your dollars. And when you have a dollar that's not backed by anything, the gold window was closed in 1971 by Mr. Nixon. I mean, it's only backed by what they call the full faith and credit of the United States. When you take your full faith and credit and you tear it all up and you say, well, we don't like you, we're going to take your stuff. You've just told the whole rest of the world that we can't trust those guys. I mean, this is a generational thing. It's going to take it'll take 20, 30, 50, 100 years to rebuild that reputation if everything stopped tomorrow, which I don't think it will stop tomorrow.
And Byron, just curious to get your thoughts on the current situation, here in the U.S. We have inflation at 40-year highs. Some arguing it's much higher than the Fed tells us. We have the Fed saying they're trying to fight inflation. We're tightening. We want to get to 3.5% by year end. What's your take on what's going on here?
Well, they've been lying to us all along, or at least misstating the fact. They said, well, there's no inflation. Then they said it's transitory inflation. They said, oh, it's only a little bit of inflation. They said, well, it's some inflation, but it's only going to last, it's this or that. Now it's all, now that it's really turned structural. I mean, now that everybody feels it, you feel it, I feel it. I mean, Danielle, you go to the store. You have a young child. I mean, you go to the store to buy baby formula. I
Yeah.
suppose maybe a child beyond that. I'm not sure.
Times two,
But
times two. I have twins, so yes, I really feel it.
yeah, I mean the prices are like this, and baby formula is in shortage. And you go to the gas station, and you fill up the $40 fill up is now an $80 fill up, and holy smokes, look at that. Everything. This inflation has been structurally built into the economy, and people are expecting inflation. And the stores and the companies that produce the things that you see in the stores, they're expecting inflation. So everybody's kind of geared to a certain mindset. And when you look back 40 years, it took Paul Volcker jacking up interest rates to that magic 19-20% number to really strangle inflation out of the economy. And it worked for a couple of generations, but we've done it all over again. Then the other angle, and we haven't talked in a long time, but and I know you and you know me from years ago. I mean, I'm an energy guy. I mean, I started out as an oil company geologist for the old Gulf Oil Company, which is now part of Chevron. And so I'm an energy guy. I'm an oil and gas guy, and I like uranium. And I mean, the Biden administration right now, and I say that they just happen to be the people who are in office. This is not a Biden thing. He's out of it. He's got other people, telling him what to say and what to do. But it does not have an energy policy. It has an environment policy, and the environment policy is really a climate policy. And that climate policy is all about closing down fossil fuels because of CO2, carbon dioxide. I mean, everything about it. No Keystone XL, no drilling, no leases, no permits, all of that. And if it hadn't been for them, marching the whole, marching this thing forward, and the world getting into this energy situation in Europe, Ukraine, Russia, and jacking all the prices up, by double and triple numbers, and even more in terms of, what they pay in Europe for natural gas. If it hadn't been for that, we would still be living with this, crazy climate policy masquerading as an energy policy. We've screwed up energy, and energy is the foundation. Everything takes energy to produce. Whether it's diesel fuel or whether it's the fertilizer on the fields, whether it's the train that hauls it to the market, the processor, the truck that brings it to the store, or you driving to the store, bring it home. It's all about energy. And when you screw up energy and jack up the input on the energy side, you have screwed up everything. And that is why this inflation is structural. And I don't know what the cure is, but it's gonna need a whole revamping of the approach to energy. And I don't just mean build more windmills or something.
Wow. So, we're talking nat gas supply. How grim is that outlook for you?
Well, before we came on, I told you that I live in Western Pennsylvania, and I'm very happy because I'm in the middle of the Marcellus Utica, shale arena, and I actually have a deal with my local natural gas supplier for my house and whatever that I bought in long term. But if I hadn't done that, I'd be in a lot of trouble. I mean, people who the United States has had cheap natural gas for quite a while, courtesy
Yeah.
of fracking. And we've done very well with it. I mean, I know people who run steel mills, and they're very happy to have cheap natural gas, and the power companies, what have you, the chemical companies, what have you. Just north of Pittsburgh, Shell Oil Company, Shell, the Royal Dutch Shell, has a $5 billion capex in their ethylene cracking plant. Right on the Ohio River, just north of Pittsburgh. It's a magnificent piece of infrastructure that they spent years building because it's right in the heart of Marcellus Utica natural gas. It's all good. Now along comes the situation in Europe where they say, well, we're not going to buy that Russian gas anymore. We're going to get away from it. And for some strange reason, again, it gets back to the almost the ignorance of the people making policy in Washington. They don't understand energy. They say, well, we'll just have like a Berlin airlift, except it'll be a sea lift of LNG gas over to Europe. We're going to take all this U.S. natural gas. We're going to send it over to Europe. We're going to fill your gas. We're going to fill your natural gas pipelines. To which I say, no, you're not. And to the extent that you are, you're going to screw it up for everybody. There's not enough tankers. There's not enough LNG facilities, either liquefying here or deliquefying there. Not enough storage facilities. Not enough of anything to get a significant amount of gas across the pond. This is not going to be a Berlin airlift. It's going to be a Berlin air crash, if it's anything, because we are not going to fuel Europe with North American natural gas. I mean, at the same time, in the sense that pretty much everything that can be liquefied is being liquefied these days, natural gas wise. I mean, every molecule that they can liquefy at Cove Point, Maryland, and all these other LNG places, up and down the coast, every molecule in every bit of those production facilities has been contracted out for a year and a half into the future. I mean, they are maxed out. And what that means here in the U.S. is that what I used to pay for natural gas, $3 a thousand cubic feet or whatever like that, this coming winter or next winter, I mean, who knows? I'll be paying 10, 12, $15. I'll be paying 4 and 5 times what I am now. And not just me. This is like you and everybody else. I mean, anybody out there who hasn't figured it out yet. If you're on natural gas, expect your bill to, let's say, triple. By this time next year. So what does that mean? It means we're going to spend a lot of money on energy that we didn't really have to if we had played our cards collectively, politically, a little bit different, a lot different.
Just want to round things up here, getting your thoughts
Mhm.
on gold. I know you've written a lot on this metal. Um, Investors want to know, when does $2,000 gold? I know we hit it briefly, we've been playing around, flirting with it, but when does it become the new normal?
Mhm. Well, I mentioned earlier that that Russia's kind of put that call it a bumpy floor underneath gold. So I think the downside is really kind of limited by Russia and its monetary reaction to sanctions. As far as where the upside goes from here, uh, we are moving into an era when uh, the old full faith and credit of these like fiat computerized greenback dollars has been broken, and and gold is at least one of the things that's going to be in kind of the commodity currency of the future, a commodity backed currency of the future, some mix. I don't know that we'll go back to a gold standard where people are going to walk around with gold sovereigns in our pocket. Not that a lot of people ever did that, even in the days of the gold standard. I mean, that's a fairy tale as well. But But we're moving to a different way of accounting for international trade, and it's going to be a basket of things that include energy, gold, various commodities, maybe even some agricultures in there,
Yeah.
and it's going to be the way that nations settle up on their trade. So but all that said, I think that gold has plenty of upside. I've covered the junior miners a lot in the past like 15 years. Um, 80% of the time with junior miners, 80% of the time, you're in sort of a bearish market. Just kind of the way it is, the nature of the beast. But when that 20% of the time comes around, and those are your days. That's when you want to have accumulated a lot of those small but good exploration and junior development companies, and have them sitting in your stock account, because that's when they're going to be going up.
I'm sure a lot of the gold bugs out there will be happy to hear that. They've been patient a long time, as you know. I thoroughly appreciate your thoughts today. Just bring it home for us. Final thoughts for all our viewers watching out there, Byron.
Well, just here. Oh, there's so many things to say. Let's focus on this. You're
Yeah,
watching the war in Ukraine unfold. The special military operation in Ukraine unfold. Much of what you see in the Western media is kind of a pro-Ukraine propaganda, and whether you're really on Ukraine's side or not, you just got to realize that that's what you're seeing. Do not be surprised in the next month or two, uh, if and when this thing wraps up in a way that is surprising. I was talking with one of my old Navy buds the other day. We were talking about the sinking of that cruiser last week, where they put
yeah,
those two missiles into the side, blew it up, and went down to the bottom of the Black Sea. Um, a lot. First of all, it shows you that surface fleets are fairly obsolete these days if you don't know what you're doing. But secondly, that may have been the moment in the war of peak Ukraine. Um, peak Ukraine fought off the Russians around Kiev. Now they have a huge battle out in the east, and I don't I don't know how the Ukrainians, as a spent military force at this point, can prevail against the Russians. This war is going to come to an end. The sooner the better. They're going to redraw the map. Russia's going to get a big whack of it. Will the world go along with Russia and somehow, desanction things and pull
yeah.
back and try to repair the damage to the dollar? I don't know. I don't trust our politicians to do the right thing. I don't know that they know how to do the right thing in so many ways. But watch this thing come to a surprising conclusion faster than what you think. There's going to be a lot of finger pointing and recrimination, and the end of big wars. And this is a big war. It's a big war in so many ways. The end of big wars bring big changes. We're going to change the map. We've changed the global alignment of the monetary system. The whole correlation of monetary forces has changed, and a lot of things that you used to think were true aren't going to be true going forward. Which is why you want to own real stuff. Gold, silver, commodities, energy, land, ag. Productive facilities, factories, things, buildings full of smart people who know how to make
Yep.
things. So that's what
Own
that's what I'm looking for the future.
own the real stuff. Byron King, I'm so
Own
glad we reunited. I'm glad I found you, and here we are. Let's not wait so long the next time. Come back soon.
I'd be happy to speak again. Good luck to you and best wishes. Like I said, you're doing a terrific job with your new, with these webcasts that you're doing. And to all the viewers and listeners out there, hey, good luck to everybody. God bless you all. Pray for peace, and hang on to your gold.
Above all else, pray for peace indeed. Byron, thank you so much, and thank you all for watching. We'll have much more incredible content, thought-provoking content coming your way here on Stansberry Research. And don't forget to stay on top of all the latest interviews by signing up at danielacambone.com. That's it for me. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.